Okay, let's unpack this. We've got, well, a really fascinating stack of sources for you today.
Yeah, it covers quite a range, doesn't it?
It really does. Everything from these big digital shifts in finance and massive agricultural projects.
Right, the really large-scale stuff.
All the way down to, the very personal challenges. Housing, the cost of essential things like menstrual products.
And then there's regulation, too, how the system tries to manage behavior, complex business disputes. It's all in there.
It might seem like a bit of a mixed bag at first glance.
Definitely looks that way on the surface, yeah. But our mission, really, in this deep dive, is to pull out the most important insights, the key takeaways from all these sources.
And see what picture starts to emerge, right? About the challenges, the opportunities.
Exactly. And how policy, investment, how it all actually impacts everyday life in Ethiopia right now. It's about connecting those dots.
What's really fascinating, I think, is seeing how these pieces that seem so separate, they're actually not separate at all. So we'll start with the big gears turning the financial system, these ambitious projects on the ground.
And then zoom right in.
Yeah, zoom in on how those dynamics play out in people's homes, their daily struggles. And then we'll look at how the system tries to manage things, resolve disputes.
And seeing how those different layers interact, that's where it gets really interesting, I think.
Absolutely. So let's jump right in. Efforts to modernize Ethiopia's financial markets. There's this big push from the National Bank.
Yeah, moving government bonds, securities, getting rid of the physical paper, basically.
Right, onto secure digital records. They're calling it dematerialization.
That's the term, yeah. The MBE put out a draft directive recently to mandate this.
Yeah.
The main goal is pretty straightforward: streamline things.
Make it easier to issue, own, transfer securities.
Exactly. And, boost investor confidence. Plus, frankly, getting Ethiopia's market infrastructure aligned with international standards. That's a big piece, too.
Governor Mo Mefetu had mentioned this before, didn't he? Making treasury bonds more available to the public.
He did. It sounds like they really want to broaden who can invest domestically, open it up a bit more.
And the infrastructure for this, it's a central securities depository, a CSD system.
That's the plan. It's designed to hold and manage all these securities electronically. And the vision is for it to handle, well, a whole range of things eventually.
Not just government debt.
Government debt initially, yeah, but potentially corporate bonds, maybe even equities down the line. It's about building that core system for transparency and stability.
And this isn't a small market we're talking about. The sources mention over 447 billion birr in T-bills outstanding as of June 2024.
Right, and over 99 billion T-bonds. It's substantial.
And that T-bill interest rate, 16.5% last month on average.
Which is pretty attractive, actually. When you look at the inflation index for April 2025, it was 2.1 percentage points above it. So yeah, government debt is looking like a relatively decent option for some investors right now.
The banks seem to think so too. Tadessa Tia, the CEO of Sidama Bank, is quoted saying, digitizing these securities would strengthen the collateral banks hold.
Right, which could potentially improve liquidity, in the interbank lending market, make things flow a bit better between banks.
And looking ahead, the Ethiopian Securities Exchange, the ESX, they're planning secondary market trading for these.
Yeah, using their automated trading system, the ATS, that's the platform where bids and offers get matched electronically.
So you could buy and sell them more easily after they're issued.
Exactly. And the ESX CEO, Tilahun Kasahun, he sees this liquidity as key, opening it up, expanding the investor base, especially since T-bonds are tax exempt, which is a nice incentive.
This whole financial modernization piece, it's not just the digital records, is it? We're also seeing standalone investment banks getting licensed.
Right, by the ECMA, the Capital Market Authority. The sources specifically mention CBE Capital and Wegogan Capital.
Wegogan just launched, right, beginning of June.
Yeah, June 2nd, 2025. Their CEO, Bruto Wittawit, basically said their goal is unlocking capital, spurring investment, accelerating development.
Targeting who exactly?
Government entities, big corporations, and high net worth individuals. The usual suspects for investment banking.
And CBE Capital, that's linked to the Commercial Bank of Ethiopia, the state bank.
Yeah, CBE owns a chunk, and Dalal Capital has 30%. Their CEO, Zemedin Nagatu, he really emphasized the role of investment banks in mobilizing resources.
Getting money moving beyond just savings accounts.
Precisely. He pointed out that a lot of people still just stick money in low-return savings deposits. These firms, he believes, can channel that into actual investments. He mentioned their brokerage fee is 1.6%, trying to be competitive.
So experts generally like the digital shift. Makes sense.
Yeah, they agree it eases mobilization. But, there are always caveats.
Like what?
Well, some point out that for government debt to stay attractive long-term, especially if mandatory purchases by banks eventually stop, the policy rate might need to go up.
To keep investors interested.
Right. And there's a really strong call for reforming how pension funds and other big institutional investors operate.
Oh.
One expert, Weird Fikiri Yohannes, was pretty blunt.
Oh, yeah.
Said the government shouldn't treat pension funds like its left pocket, Let them grow based on market principles, not just be a source of funds.
That's a fair point. And what about interest-free banks?
Yeah, for them, incorporating government securities gets complicated, especially around how the returns are taxed. It's not a simple fit for everyone.
So for an individual investor, what does this CSD process actually mean?
Okay, so if you have physical certificates now, they need to be dematerialized, turned into electronic form. You'd open a securities account, go through the usual KYC, know your customer stuff.
Verified.
Right. Each security gets a unique code, an NSIN or ISIN, and the sources make it clear. It's on the investor to make sure everything's accurate and to respond to any notifications.
Okay, so that gives us a sense of the planned digital shift in finance. It's quite abstract, though. Let's maybe switch gears to something very tangible, very physical on the ground.
Good transition. Sources detail this huge agricultural project by Horizon Plantations Beerlift. That's part of the Abiyuri group.
And when they say huge,
they mean at 20,000 hectares. In the Somali regional state, across two zones, City and Shabelle.
Location near the Shabelle River. That must be key for water.
Absolutely. The area is known for extensive groundwater resources, which you definitely need for irrigation on this kind of scale.
And the investment, nearly 30 billion birr.
That's the projected initial figure, yeah. The expectation is that the Development Bank of Ethiopia, the DBE, will finance about 75% of that. Though DBE declined to comment, said the loan appraisal is still ongoing.
But here's what's striking. That huge 30 billion birr figure versus what's reportedly been spent so far?
Only around 21.8 million birr.
Yeah, it's a massive gap, isn't it? And a huge chunk of the budget, like 85%, is for infrastructure.
Like irrigation systems, cold storage.
Right. And they need a lot of foreign currency for that, about 5.5 billion birrs worth. That's a big ask.
What do they plan to grow there? A pretty diverse mix, actually. Seems strategic. Oilseeds, groundnuts, sunflowers, soybeans, cotton, high-value stuff like alfalfa, and fruits, oranges, mangoes, lemons.
And the main reason behind all this?
The big strategic goal is to supply another mid-Euro Sea company, the Shager Edible Oil Factory. Ethiopia imports most of its edible oil, right? Produces less than 5% of what it needs.
So this is about import substitution, trying to produce it locally.
Exactly. Reducing that heavy reliance on imports is a major national goal.
But Horizon sees broader benefits too.
Yeah, their general manager, Netzanet Gashai, talked about integrating the Somali region into national supply chains, tapping its potential. And they hope for big indirect benefits for locals, maybe supporting up to 20,000 people through other businesses and services that spring up around it.
And direct jobs.
Around 1,140 permanent positions planned, with an annual wage bill expected around 220 million birr.
Are they looking at exports too?
They are. Opportunities in the Middle East, Europe. And domestically, besides the oil, it could help with nutrition, livestock feed, from the other crops and fruits.
And financially, how does it look? On paper, anyway.
The projections seem, promising. They project recouping the investment in 10 years. Profits starting modestly, but then surging pretty dramatically. Good cash flows, asset growth, and about a 13% after-tax return on investment expected.
And Horizon is already a big player, right? They're not new to this scale.
Not at all. They're huge in coffee, apparently supply Starbucks even, plus spices, dairy, other crops. They've got another big oilseed project elsewhere too, so this fits their profile.
Okay, but the sources also give some important context about the Somali region itself. It sounds like there's a gap between investment registered on paper and what's actually happening on the ground.
Yeah, the Regional Bureau apparently points to persistent problems. Fragmented coordination, skill shortages, inconsistent regulations. It suggests even a big company like Horizon will face a pretty complex local environment.
And consultants reviewing the project had warnings.
They did. One saw it as a crucial opportunity if it's managed well. Stressed the need for really robust oversight to stop capital being misused.
Acknowledge the potential benefits, taxes, jobs, forex.
Right, but also flagged significant risks. Things like high labor costs, delays in compensation, Maybe mismatched expectations between the company and locals, potential for conflict.
Weak institutions, environmental impact from irrigation, cultural issues. Sounds like a lot to manage.
It really does. The consultant's view seems to be great potential, but it absolutely hinges on solid, long-term planning and, crucially, genuine community engagement.
Yeah.
Without that, they warn, it could just collapse once the external funding dries up.
So, massive ambition, but bridging that gap between the plan and the reality on the ground is the real challenge.
That sums it up perfectly.
Okay, so we've looked at big investment, big ambitions, from finance to agriculture. Let's pivot now and focus on some of those fundamental everyday costs and necessities that are really challenging people personally.
Yeah, and a really stark example from the sources is the housing crisis in Addis Ababa. It's bad. Despite construction, the gap between need and what's available is just widening.
Big city, over 5 million people, and more living in informal housing, right? Outside the legal system.
Exactly. And the government's latest big scheme for public servants, starting with teachers. It was hyped as a solution. The state bank, CBE, pledged a huge amount, 120 billion birr for financing.
But when you look at the numbers...
Oof, yeah, this is where it gets rough. For a supposedly affordable place costing, say, 4 million birr, you need a 25% down payment. That's 1 million birr.
A million birr. For a teacher earning maybe 10,000 birr a month.
Right. That down payment is like 8 years of their entire salary, assuming they save every single penny, which is impossible, obviously.
8 years just for the down payment. Wow. And even if they could manage that, the mortgage.
Crippling. At a 14% interest rate over 20 years, the monthly payment is over 35,500 birr.
More than triple their income.
Yeah, the sources are pretty blunt. A supposed lifeline turns into a mirage. It looks like help, but the math just doesn't work for the people it's supposed to help.
And this is all happening with rapid urbanization, population growth, really high inflation, over 30% last year, a weakening birr, while public sector wages have hardly moved.
And for many civil servants, housing already eats up more than half their income. It's unsustainable.
So what are the other options? Formally, I mean.
Well, there's the public housing waiting list. Over 800,000 people on it. Getting a city-run flat can take like a decade or more. And private developers, they're building for the wealthy. Units starting at 10 million birr plus.
So people turn to the informal sector.
That's what happens. Over 70% of new urban housing across Africa is informal. Addis is no different. People use savings groups like Equip, money from relatives abroad, informal loans. It's faster, more responsive, even if it's legally murky and risky.
Are there proposed solutions in the sources, ways to fix this?
Yeah, they float a few ideas. Tackling that huge down payment barrier is key. Maybe a housing equity fund, finance through bonds or concessional loans.
And the borrowing costs, the interest rates.
Exactly. Lowering rates through subsidies or maybe public guarantees could make a massive difference. They give an example. If the rate was 6%, that monthly payment on a 3 million birr loan drops to around 21,500 birrs. Still a lot, but way more manageable than 35,500.
Other ideas.
Fostering cooperative housing, rent-to-own models, giving incentives to private developers.
Like what kind of incentives?
Density bonuses, faster permits, tax breaks, maybe access to public land if they agree to build units below a certain price. The argument is, yeah, these incentives cost something, but maybe less than the social cost of huge slums and widespread discontent.
Land reform is mentioned too, right? Curbing speculation.
Yeah, things like transparent auctions, predictable zoning. And the National Bank could potentially play a role in guiding home loan rates towards social goals, but carefully, to avoid creating a housing bubble.
Because doing nothing means...
more informal sprawl, strained infrastructure, deepening frustration. One quote really hits it. Addis Ababa lacks a housing finance system tailored to its social objectives.
The system just isn't built for most people's incomes. And the source contrasts official talk about loans being free from excessive interest charges with the actual data.
Calling it exclusion dressed as inclusion, because the numbers just exclude most people.
And it underlines that housing isn't just shelter, it's about dignity, trust. When these promises fall flat because the math is impossible, trust erodes.
It's a powerful point. Government credibility, like shelter, is built brick by brick, not just by signing some agreement.
That's a stark reminder. Okay, let's shift to another fundamental cost, one that's often hidden but causes real hardship, period poverty.
Yeah, the sources really personalize this. We hear from Miseret Mole, earns about 4,000 birr cleaning homes. She says affording pads is a constant worry. She has to rely on friends, get credit, even use rags sometimes.
And Mulanish Wildemariam, a janitor earning 3,000 birr. She prioritizes pads for her daughter, but for herself, often uses sheets because a single pack costs around 75 for her. That's a big chunk of her income.
And these aren't just anecdotes, the stats back it up. A 2020 survey found only 28% of Ethiopian women have what they need for their period, and a quarter use things not designed for it: rags, newspaper, even ash.
And a big part of the problem is tax, isn't it?
It is. There's a 15% VAT on pads and tampons. Import duties on finished pads came down, but are still 15% after a 10% surtax was removed. And crucially, when VAT holidays were given on other basic goods last year, menstrual products were left out.
And even when taxes are cut, officials admit it doesn't always reach the consumer.
Right. Prices often don't drop accordingly. And local producers are struggling too. Milla, for her, a social enterprise, said their material costs and overheads have shot up way faster than they can raise prices. It squeezes their ability to make affordable options.
Importers like the Ruby brand face similar issues. Tariffs, rising global costs, shipping, compliance fees, it all adds up.
And you see the impact directly in places like schools. A deputy principal, busy work at Tile, said over 30 girls at her school need pads daily. There's no budget for it. They ration 1 pack a month from medical supplies, and female teachers often pitch in their own money so girls don't miss school.
Are policymakers trying to do anything?
Reportedly, yes. Duties on raw materials for local factories dropped from 30% to 10%. There are plans for a letter of guarantee system for duty-free inputs. They're talking to the Ministry of Trade about classifying pads as medical supplies, maybe targeting hoarders, and supporting makers of washable pads.
But advocates say it's not enough.
Pretty much. Urji Biso, a law lecturer, argues tax cuts are just one piece. She stresses that the high cost is the driver of period poverty. It leads to girls missing school, women losing wages, poor hygiene, mental strain.
So what's needed?
A broader approach, she argues, scaling up local production of affordable pads, normalizing washable pads where practical, and comprehensive reproductive health education. Access to these products, she says, is fundamental. It's about health and rights.
People point to Kenya, right? They scrap the tax, provide free pads in schools.
Yeah, that example comes up. Advocates are calling for bolder steps like direct subsidies in Ethiopia.
Because ultimately, for women like Meseret and Mulunesh, these policies are just words until the price actually comes down on the shelf.
Exactly. The sources really bring home the personal cost behind the statistics.
Okay, so we've seen how big economic forces and these fundamental costs impact individuals. Now, let's look at how the formal system tries to regulate behavior and handle disputes. First, reckless driving.
Right. There's this new approach. Mandatory rehabilitation programs for drivers who get their licenses suspended.
A shift away from just fines.
Yeah, officials from the Road Safety Fund admit fines alone haven't really worked as a deterrent. So the idea is to be more corrective, more rehabilitative.
How does it work in practice?
It's compulsory, a 14-hour training course over a week, then an assessment. And the driver has to pay for it all. Completing it is required to get your license back.
And this is linked to specific violations, demerit points.
Exactly. Under the amended traffic rules, like causing bodily harm gets you 14 points, 6-month suspension, causing 2 or more deaths is 21 points, 18-month suspension. It's cumulative, so repeat offenders face tougher penalties.
What's the training actually cover?
Focuses on psychological behavioral change, targeting speeding and negligence. Specifically, officials see those as major causes of fatal crashes. Modules cover accident causes, prevention, safe highway use, revisiting traffic laws.
And vehicle owners and associations have new responsibilities too.
Yeah, verifying driver records, monitoring compliance.
Yeah.
But there's pushback, significant pushback.
From drivers, associations.
Yeah. They see it as unfair, even humiliating, like professional drivers are being treated like delinquents. They question how it can be enforced effectively, and they feel penalized twice the initial penalty, then paying for this mandatory training.
Double jeopardy is the term they use, and the cost is a strain.
Right. But city officials seem determined. They're urging everyone to act on road safety. And the stats are worrying. Fatalities decreased slightly last year, but injuries jumped 35%.
Pedestrians are hit hardest.
Massively. 86% of traffic fatalities last fiscal year were pedestrians. Meganega is a real hotspot. Speeding is blamed for nearly half of deadly crashes. Driver error overall cited in 68% of accidents nationwide.
And this is happening as vehicle imports are surging.
Yeah, 67,000 imports, 46,000 accidents last year, an average of 9 deaths a day. Officials call speed a silent killer, blaming driver miscalculation.
But not everyone agrees this rehab program is the answer.
No. Transport expert A.B. Aline is critical. Says focusing only on drivers is simplistic framing. It ignores bad roads, poor signage, other factors.
And he doubts a one-size-fits-all training will work.
Right. Says it won't address the different reasons for errors and might just add more pressure on already stressed drivers. So definite tension between the official line and some expert views.
Okay, let's shift to another case involving regulations and disputes, this one in the business world, Purpose Black.
Yeah, this company, which made waves with its big plans, is now facing a huge tax demand, over $500 million birr.
$500 million, wow. Back taxes, penalties, interest for 2023-24, mostly withholding tax and VAT.
That's right. The sources call it intensifying an existing regulatory storm.
Give us the background again. Founder Fisa Ashetu, the K. Gibaru grocery chain, this unconventional way of raising money, plans for that massive 115-story tower.
Yeah, valued at $5 billion birr. They claimed to raise $1.5 billion in a first round, then had another offer promising housing benefits.
But things went sour. Buyers were waiting, saw little progress.
Exactly. Nearly 1,750 of them. Then it escalated last August. The CEO, other execs arrested over alleged questionable financial practices. Investigations kicked off. Fasea Shetu left the country, claiming pressure.
And the core allegation is
fraudulent marketing, basically bundling share sales with promises of housing. Sources suggest commissions were paid for selling shares disguised as homes. Those legal proceedings are ongoing.
And now this huge tax bill on top of it all. What are the specifics?
Okay, withholding tax. Ministry claims over 31 million birr, including penalties and interest. Purpose Black contests it. Their lawyer argues they should be exempt for goods bought from farmers because they're a social enterprise.
And the VAT, that was a really big one.
Over 473 million birr, including penalties and interest. Again, Purpose Black contests it vigorously. They argue the money, 1.4 billion birr they claim, came from share sales, not direct housing sales. And share transactions shouldn't attract real estate VAT or interest.
Their lawyer said they never intended to provide actual apartments, just potential benefits linked to the investment.
That's the argument presented. But this is where expert views really clash.
Just so.
Tax advisor Dawit Kajila flatly rejects Purpose Black's argument, says there's no tax regime where share purchases entitle someone to a house. He sees it as a sale, plain and simple, so it's taxable.
But another legal advisor, Daniel Fikadu, urged caution.
He did. Argued against taxing prematurely, without clear proof of ownership transfer. Said you can't tax for income when there is no written agreement for a property sale. He warned this could scare investors, especially those who put money down hoping for property.
And he raised a concern about who gets paid first if the company is in trouble. Government taxes versus shareholders.
Exactly. A big concern about the government's claim potentially taking priority over shareholders trying to get their money back. It seems the whole thing hinges on what those transactions legally were. Were they shares or disguised sales? Proof is key. The ministry isn't commenting, citing the ongoing investigation. It really highlights the friction when new business models meet old regulations.
Okay, finally, let's look at protecting unique traditional products. Geographical indications, or GIs. Ethiopia is launching a big initiative here.
Yeah, this is about creating a legal framework that formally links a product's quality or reputation to where it comes from geographically. They're partnering with EIPA, the Ethiopian Intellectual Property Authority, and WIPO, the World Intellectual Property Organization.
And the goal isn't just legal classification, is it? It's bigger than that.
Much bigger. Minister Balit Molla talked about it as a strategic tool for economic transformation, using identity branding to build value, open new trade routes, get better prices, create jobs.
So they're developing a law, a draft proclamation.
Right. Defining GIs versus trademarks, setting up collective rights belonging to the region's producers, not one company, and requiring detailed specs for quality, production, traceability.
So, again, the idea is quality, reputation, characteristics tied directly to the place, like champagne.
Or Parmigiano-Reggiano cheese, Darjeeling tea, those famous examples. And these GIs often get much higher prices, maybe up to 50% more.
And Ethiopia has obvious candidates, right? Yirgacheffe coffee?
Absolutely. Addis Hef, Tigray honey, spices, traditional textiles. Lots of potential.
The benefits seem clear. Better pricing, brand loyalty, competitiveness, maybe even rural tourism.
Definitely potential there. But the sources also flag challenges. High transport costs within Ethiopia, not enough monitoring to ensure compliance. And sometimes it's hard to distinguish products from nearby regions, which could cause confusion.
Could GIs also shift power dynamics away from middlemen?
Some hope so, especially in markets like coffee. Giving producers more control over their product's identity and value could potentially reduce the grip of big monopolies.
But research is needed to define the exact specifications for each product.
Crucial. Universities are apparently working on specs for coffees like Yirgacheffe. But there's already concern about widespread mislabeling in the market. You need ethical, transparent exporters and traders for GIs to work.
What about existing cooperatives, like the Oromia Coffee Union?
They offer an interesting angle. They've already got independent origin certifications that help them access markets. They're looking at the cost and effort of formal GI registration. But they also face other huge challenges. Climate change, rising labor costs that impact production regardless.
And enforcing these GIs legally, that's another hurdle.
Big one. IP laws exist, but enforcement capacity needs strengthening. Need to learn from other countries. Plus, getting all producers in a region to consistently follow the exact specifications? That can be tough. Inconsistency undermines the whole system's credibility.
And just to be clear on the difference again, GIs are collective, tied to the place, can't be sold like a private trademark.
Exactly. Trademarks are owned by a company, GIs belong to the region and its intrinsic product qualities. WOPO sees huge potential for Ethiopia here.
Protecting the brand globally, reducing risks, shielding producers.
Right. Their representative, Alexandra Grazioli, stressed how vital a robust system is. Ensuring origin labeling is genuinely linked to those unique qualities derived from the place.
So what does this all mean?
Well, you look across all these sources and you get this really complex, multifaceted picture of Ethiopia right now, don't you?
Definitely. You've got these high aspirations, digitizing finance, huge agricultural projects, striving for modernization and growth.
But right alongside that, you see these really significant, persistent challenges hitting people directly. The housing crisis, the cost of essentials, the friction when regulations meet reality on the roads or in business.
And the complexities of trying to leverage national assets like traditional products, it's all intertwined.
It really illustrates how policy, big investments, regulations, they're constantly intersecting with individual lives, individual well-being, and the country's overall potential.
The ambition is clear, but actually translating that ambition into tangible improvements, into equitable access for everyone, that seems to be the core challenge. Especially with the economic realities, these deep-seated issues, and just the sheer difficulty of implementing and enforcing policies effectively. Thank you for joining us for this deep dive. We hope it's given you a clearer view and some new insights to consider.